Hello, it's Piccin from the Trading Clinic here. Today I wanted to talk to you about patterns. Now, there are a lot of different types of patterns in technical analysis. You can have head and shoulder formations, triangles, pennants, flags, double bottoms, double tops, to name just a few. You can find a lot of information on these in books on technical analysis or on the web. So there are a lot of patterns, and there are far too many for me to list. But if you familiarize yourself with them, you will begin to notice them on the charts. And they're an important part of what I do, because I like to look at these patterns and try and work out what the rest of the market will be seeing and what the rest of the market will likely be thinking and planning on doing. So you want to look for the obvious patterns, the very clear formations. Okay, so if you take something like a head and shoulders formation, I do often see people squinting at the charts and asking me whether I think it's a head and shoulders formation that they're seeing. Okay, if you have to do that, then leave it, because you want to find the patterns that are immediately obvious and that a 2-year-old could spot. If we look at dollar yen on the daily time frame, we will notice very clear head and shoulders, which is forming here on the charts. You have the left shoulder, the head, and the right shoulder. Now, a head and shoulders pattern is usually perceived as being very bearish. What happens is you have a neckline which is usually drawn from the lows or the extreme lows of each shoulder. So for example, on this pattern, the neckline would be drawn using a trend line that starts at this swing low and that connects this swing low. And once the market breaks it, which it does here, the head and shoulders is confirmed, and you are usually looking for a move with a target of the distance between the head and the neckline extrapolated downwards. I don't pay too much attention to the targets, because although the market can and often will reach those targets, it won't always do so in a straight line, and it's often hard to hold through the retracements that the market will make until it eventually reaches its target. But usually there is good profits to be made trading the actual pattern itself. And the way I trade these patterns is when the market confirms that the pattern is valid. So here it breaks out of the neckline and confirms it's indeed a head and shoulders, and you know the market players are expecting continued downwards momentum because of this technical pattern. Okay, what I do is I wait for a retracement back to the neckline. So the market breaks and it retraces all the way back to the breakout point, which is this neckline, which is continually moving forward in time. You can see it sloping up as we move forward in time. The market retraces back and then it finds resistance there, and that's where I look for price action to confirm that there will be a short setup. Again, you can see later that the market again retraces, and very sharply this time, into the underside of that ascending trend line or neckline of the head and shoulders pattern, and then the sharp move up is immediately rejected and the price makes a sharp move down. So what I look to do is, if I want to get on this bearish move, I will wait for the break, wait for the market to return to the breakout point, retest it from below, and then continue in its previous direction. So the key to these patterns is waiting for the retest.